Good afternoon, everyone. How are you doing? Welcome to Monday, August the 23rd. Just want to check that you can see my screen and you can hear my voice clearly. Type a Y if that's the case. Fantastic. Okay, good stuff. Looking forward to the week ahead. I hope you all had a good weekend. And as far as August markets go, not too dull in comparison. Nice surprise in terms of the amount of action out there. You wouldn't think about it looking at a slightly longer term chart. Let me bring up my S&P into full screen. We really finished the week not far from where we started. Let's say if we finished around at the level of 71 when we opened this morning, not far from that level at all. The week on the whole being a flat, a doji, and if you have a look at the daily chart on the S&P as well, let me make that a little larger. You can see if I move my red line, Friday's candle there also being a doji. So quite a lot of uncertainty in the market, especially on Friday. The biggest event on Friday really happening in the currency markets, which was on the back of Weber's comments. Weber, normally being the out-and-out hawk within the ECB, actually coming out with some dovish views, which effectively correlated to some quantitative easing or depreciation of the euro. And if you look at my euro chart here, this is a 35-minute chart. In between these lines you get Friday's action, and the euro coming down strongly from 128.12 all the way down to significant lows at 126.63. So very bearish move in the euros. It seems like their, according to Weber, policy going forward isn't just to concentrate on inflation. Perhaps they need to worry about growth as well. Speaking about Europe, this morning we had German manufacturing PMI data. It came out at 58.2 versus the expected 60.5, and on the face of it you would have thought this to be an odd reaction in the DAX, as the DAX moved higher this morning. Certainly wasn't seen as too much negative data, and the reason being, guys, is, listen, this isn't, we're not getting data of a strongly growing Eurozone area or the lead economy in the Eurozone, but it's data that correlates to a steady but slow recovery. Okay, and that's not actually the worst thing in the world, so I'm not too surprised about that DAX action. As long as there is growth, as long as things are heading the right direction and that number's above 50, which it is, then I think the market will be okay with that. We did have a slight move in the euro on the shorter term. Slipped to fresh lows at 126.86 on the back of that PMI, but you can see very quickly recovered, and we're just in an absolute range here in the euro. And you can see from our strategy, Piers has sent out this morning, we're still neutral, but our entry, stop and target is exactly the same as it was on Friday, because we really are exactly the same where we were on Friday. These are August markets, guys. Try not to get too frustrated with these August markets. It's actually better than usual, but as you can see, we're going, if we were to enter short 127.34, the target towards the bottom of this range, 126.85. What I think these Eurozone PMIs show is actually a steady pace of expansion, which is nothing like the double dip scenario, okay? So I think traders and investors, they need to readjust their expectations. There's nothing wrong with a slow and steady pace expansion given the current economic climate. I think the longer than that can go on, and the longer that that can grow on itself, the less likely talk of a double dip will be. Having a look at the DAX overall, it's really had actually quite a positive morning, now not far from its morning session's highs, and going on to recover a lot of the Friday's losses from Weber's announcement. So what else has been going on, guys? Well, a lot of the news has been about Japan and Japan's currency rate, the reason being that there's a lot of talk about the strength of the yen hurting the Japanese economy. And this morning, the Prime Minister and the head of finance are to meet to talk about fresh stimulus today. Apparently, the talks they had over the weekend, there was no talk of currency intervention. Currency intervention was not touched in the conversation. But there's a real lack of clarity here from the Bank of Japan. Yen's been strengthening across the board on the back of their comments that currency intervention was not discussed. the talks are seen as a disappointment, but it's just a continuing debate in Japan, and there's so much uncertainty. So all over the weekend there was speculation of Prime Minister Khan and the Bank of Japan's governor, Shirakawa, talking about currency intervention. Then the finance minister denied any knowledge of the meeting at the same time that the meeting was actually underway. So by the sheer fact of excluding him from discussion meant the significance of any chat that resulted from it lost even more ground, as you'd have to involve the finance minister if you're going to get involved with currency manipulation. Therefore, the effect of any further intervention, just on the back of verbal reports, being thoroughly blunted. Just as I talk here, guys, we're having oil spike higher. You can see oil move up 74.38. Our strategy for neutral in oil, we're looking at a neutral long at 73.43. Got no news on this spike in oil. I'm going to keep my eyes out. But a nice bullish move in oil there, guys. On the back of the German data this morning and the Eurozone data, the Bund is still holding on to its all-time highs. I still can't believe it's up here, 133.02. There's been a lot of talk about a bond asset or bond market bubble, still on CNBC this morning. The problem is, as long as, bubble conditions continue, it's very difficult to get in the way of it, and that's what you have to realize as a trader. It doesn't matter if you don't want to get involved. If you don't want to get in the way of it, then fine, don't. It might not mean that you're brave enough to go long. This is the kind of market that counter trending can really kill. I was about to say in my market view that in crude we've had no direction, but obviously we've just had that spike of not too far shy of 50 cents, or certainly 40 odd cents in oil, and that's now causing the E-mini S&P to have a slight move higher as well. Looking at a longer term on the E-mini S&P, guys, you can see the action for August. There's the famous Delusi box, as you know. What we thought we might have on Friday, that we were getting excited about on the breaking of Faber's news and the sell-off in the euro, was a possible head and shoulders pattern and a breakout to the downside here with a sloping neckline. You can see then the doji on Friday putting that into perspective, and is now actually finding support on where the neckline break could have been. So unfortunately that technical pattern out the window for now. Looking at the week ahead, guys, I think all data coming out will be very seriously scrutinized, just to see if there are further signs of any economic weakness. Looking at last week, obviously we had very disappointing jobless claims, followed by the Philly Fed, all of that on the Thursday, and that really gave the market its woes. Looking forward this week, existing home sales tomorrow, Red Book on Tuesday, again home sales on Wednesday. Not a huge amount on the wires, to be honest. It's not too dissimilar for an August week. What else is out there? I shared news with you guys about the US and their diminished appetite for